What's really exciting about this transaction is the portfolio that we're creating has as its foundation 10 Tier 1 assets. So we have half of the world's biggest gold mines in our portfolio. That gives us the strength to manage and run our business for literally decades to come.
Is scale an issue when it comes to gold because of the high costs of exploration and production and declining reserves? Is that why we've been seeing so much consolidation in this sector?
It's certainly a factor for consolidation, and the gold industry needs to consolidate more. When we looked at our strategy, one of the great strengths we see in the Newmont business is our ability to operate very large Tier 1 long life operations. And so when we looked at the opportunity with this transaction and the opportunity to strengthen our portfolio with more Tier 1 operations, it's really leaning into a capability and a strength of ours. It's long life in gold, but long life gold ore bodies often come with copper. And so this transaction is also about the ability to diversify more into copper.
Will you also be looking to raise capital now that this acquisition is complete? Perhaps look at offloading some of the assets you've acquired?
Our focus is the two companies have got very strong balance sheets. So the combination of the two companies starts with a very strong balance sheet. So we will be looking at integrating safely the new businesses and generating the cash that we can see from those businesses to further strengthen that balance sheet. So no opportunity to raise capital, but an opportunity to lean into the ASX in terms of attracting new investors into the Newmont stock, and a story that we have in terms of a gold production profile that's unsurpassed, a returns framework that is the best in the gold industry, and the exposure to 150,000 tonnes of copper as another revenue source. We think that's quite special, quite unique in Australia, and we're going to lean into that opportunity and look to attract the Australian investor into the Newmont stock.
There is some speculation that the Telfa mine in Western Australia might be one that Newmont is willing to let go. Are you committed to it?
There's a copper concentrator, there's an airstrip, there's a village. We'll look to understand the strategic potential of that asset and be focused on safely incorporating into our business and having it contribute to the synergies that we see and we've committed to from this transaction.
You've been talking about exposure to copper. What do you say to local investors who are bearish because they say their exposure to copper has been diluted through this acquisition?
The conversation we've been having with the investment community here in Australia is that with Newcrest coming off the ASX and with Oz Minerals coming off the ASX, Newmont replaces both those companies. So if you're looking for exposure to gold and gold equity with strong returns, then there is no gold company or gold equity better than Newmont in terms of the strength and the balance of our global portfolio, and 150,000 tonnes of copper each and every year, and an organic growth pipeline that is the envy of the mining industry in terms of our ability to grow in both gold and copper. So we think there's a really unique story.
What do you make of the federal government's critical minerals strategy? Is it something that Newmont would like to tap into?
Certainly, I think critical minerals is an important part of the debate that's happening around the world at the moment, Australia, United States and elsewhere. We certainly see copper as a critical mineral, and we'll be doing everything we can to encourage governments to ensure that copper is included in the critical mineral policies that they're setting in terms of the incentives to bring on copper. It is an absolutely essential metal for the energy transition.
Now, of course, you are the world's largest gold miner. It has come back from a recent high of $2,000 US an ounce. How do you see the price from here?
It's held quite stubbornly in that $1,900 to $2,000 band for the better part of the last year. And it's interesting, normally at times where you've got tightening monetary policy, you'd start to see gold come off a bit. So it's holding at a time when interest rates are high, inflation is high. We are certainly seeing central bank buying, and you're seeing volatility around the world that is contributing to gold prices as a safe haven. As we look forward, and would hope to see some easing of that monetary policy, I think that bodes well. It's very positive for gold. So the opportunity for gold to maintain current levels and potentially go higher or stay stronger at this level, we're quite excited about that.
Tom Palmer, good to speak to you.
Great, thank you very much.